Bitcoin is right now in a very critical situation. We have touched our resistance level and got rejected out of it. By that, we have started to form a secret pattern. What are the probabilities? Can we start pumping to the upside, or are we gonna have a massive crash within the next few days? Let's analyze.
My crypto paradise.
Hello ladies and gentlemen of the Paradise Club, this is Simon from my crypto paradise. Let's analyze Bitcoin. In the previous video I have told you that with the highest probability from here, from $108,000, we will start pumping towards this resistance area and then we will start going down. Let's take a look what happened, ladies and gentlemen. Right here from that $108,000 we have been pumping towards our resistance area, and right now we are getting some kind of rejection. The important thing to understand is that right now we are creating some secret pattern that I will be breaking down in for you in this video on multiple time frames. So let's start with weekly time frame. Here we will remind ourselves the context very quickly. So first of all, what you need to understand is that we have finished the 5 moves to the upside, 1, 2, 3, 4, 5 from 2023 towards 2025. Here with the ending diagonal formation in that 5th wave, we have basically finished our cycle and we have started to have a rejection to the downside after we have dropped by around 30%. You know that we have been caught in that right at the top. We have started to creating corrective mode wave pattern on weekly time frame. The corrective mode wave pattern of expanded flat. There is no picture right now, but I will share it with you later. So the important thing is to understand that we have started corrective mode wave pattern, expanded flat, where the A wave is a corrective mode wave, B wave as well, and then we will have a motive mode wave, C wave, ladies and gentlemen, that will with the highest probability take us towards $44,000 exactly. And then by the end of 2026, early 2027, we will hit $240,000, ladies and gentlemen. Let's take a look right now what happened with this resistance level, $121,000, because it's extremely important to see that we have got plenty of bearish signs right here, right? So first bearish sign was that the first attempt of breaking above our magical number $121,000 was unsuccessful. That's one thing. But the second thing is that we have also created a shooting star candlestick pattern. All right, as you know from our website mycryptoparadise.com, these shooting star candlestick patterns you usually see at the top of the bull trends. All right, if that's gonna be confirmed by bearish engulfing candlestick pattern, this is a confirmation of this shooting star candle, ladies and gentlemen. Something similar I have been telling you during 2025 in January, right? Shooting star candlestick pattern, and we have got also the bearish engulfing candlestick pattern that basically engulfed the whole body of the shooting star candlestick. So ladies and gentlemen, this was one of the confirmation from in 2025 that we will see a rejection. Right now we have created a shooting star candlestick pattern, but it wasn't enough. We have tried again breaking above $121,000 and again unsuccessful. And as you can see, the bears been really strong. They've been pushing the price heavily down, aggressively down. So not only we have created a double top formation, which is a bearish sign, but also another shooting star candlestick pattern. So 2 bearish signs, and that is also why you are seeing right now this bearish price action to the downside that is attempting to break below this ascending channel, ladies and gentlemen. So as you know, the B wave, this B wave, ladies and gentlemen, is not a straight line, and to say that it was finished, it needs to basically respect the Elliott wave theory rules, right? So it needs to create some corrective mode wave pattern, and as you already know, with the highest probability we have created an ABC zigzag that finished right here, ladies and gentlemen. If that's the case, we are beginning the C wave that will take us towards $44,000, but it's not going to be a straight line, right? Again, the C wave from an expanded flat pattern is a motive mode wave. That means unlike the B wave and A wave, which are corrective mode waves, basically 3s, the C wave is 5, right? So 1, 2, 3, 4, 5. It's a motive mode wave, 5 moves in the direction of that trend. So ladies and gentlemen, if this is the start of the first motive mode wave, again, it's not a straight line that will take us towards $90,000, but because first wave is a motive mode wave, as you know from our MCP3 University. And the first wave, because it's a motive mode wave, it's also subdividing itself into 5 smaller waves. So again, it can be an impulse or a leading diagonal. Right now, it seems like with the highest probability, it's going to be an impulse, ladies and gentlemen, and it seems like we are right now finishing the first wave. So this might be this. After that, ladies and gentlemen, we will begin the secondary wave after the first wave is finished. And the secondary wave will have few functions. Not only it will be intact with the Elliott wave theory, but also it will help us to break below this ascending trend line. You might ask, Simon, we have already break to the downside from this ascending channel, and I would agree with you, but it's not enough for a successful break, all right? Because if you want to make sure that you are not being caught in some fake outs, you are waiting for reclaim. So break, nice, with a rise in volume, we have got that, but you also need to wait for a proper reclaim. That means you need to have a retouch of that ascending trend line and change it from support, as it was acting right here, into resistance. That will be your confirmation that indeed we are having a reversal of the trend from bullish into bearish, and you might be starting to position yourselves on weekly time frame into some nice bearish short trading setups where it's going to be a high probability upon confirmations on lower time frames, and also high probability trade setups where you can basically place your stop loss very tightly to the entry price. This would be your entry price, and your exit targets can be very far away, right? This is the recipe for a long-term profitability, not only to create the highest probability trades, but also having the discipline and patience to wait for the highest risk to reward ratio trades as well. And that's exactly what we are doing inside of ParadiseFamilyVIP. Ladies and gentlemen, let's right now zoom in inside of this price section to understand the subwaves formation better. So as you can see on the daily time frame right here, you can see beautifully the subwaves of our ABC zigzag, right? Is there the zigzag picture? Oh yeah, I do have it here. So the zigzag picture reveals to you the subwaves of the A wave, B wave, and C wave, right? So the C wave and A wave are motive mode waves. That means they are subdividing itself into 5 smaller waves. So if we take a look at the C wave, ladies and gentlemen, did we get that 5 moves to the upside already? Let's calculate with me. This was the first wave, secondary wave. After we have got these 2 points, we have been basically able to predict where the third wave is going to finish by connecting these 2 points, copying the slope, bang, and we have got it, right? Another confirmation was, look at this shooting star candlestick pattern, but it wasn't enough. We have been waiting for the confirmation, and we have got it. That is the bearish engulfing candlestick pattern, and it basically told us that with the highest probability, once this consolidation is over, the resolution is going to be in which direction? To the downside, exactly. And it's exactly happened. So this was textbook, ladies and gentlemen, textbook from our website. As you can see, we are having it like this on the website. Long upper candlestick quick, we have got it. Small body, and then the confirmational bearish engulfing candlestick pattern, and bang, you have the high probability trade setup. So after that, we have got the fourth wave to the downside, ladies and gentlemen. It stopped nicely at our ascending trend line, where previously it was working as a support. It was working as a support again, and after that we have started the final 5th waves to the upside. We have got 5 moves to the upside because the 5th wave is also a motive mode wave. Together, you and me, we have been calculating the subwaves. The 5th wave of the 5th wave was extended one. And basically, after we have closed this daily candle below the previous low, ladies and gentlemen, it told us that indeed it could have been an extension towards $135,000. But because we have closed this daily candle and also had a reclaim, right? So breakout, let me show you, breakout, reclaim, that means the retest, and bang. This was basically the confirmation that we will not have an extended 5th wave that will take us towards $135,000, but this was enough with the highest probability, because if the 5th wave would be an extension, it would subdivide itself into 5 smaller waves, and the secondary wave, basically this one, couldn't break below the previous low, below this one, alright? So because it did, it basically decreases the probabilities that we might see the $135,000 before some larger correction. So right now we are moving towards towards the current price action, ladies and gentlemen. So after we have finished the 5 moves to the downside, we have started a new trend to the downside, right? So from the upside, we are changing the trend to the downside, and right now it seems like we are creating the first motive mode wave of our ultra high time frame impulse that will take us towards $190,000. I'm saying impulse because it seems like it's going to be an impulse, but because you already know that the first waves can be also leading diagonals, we'll be watching how the fourth wave will be forming. Basically, if it's going to end up in the price territory of the first and secondary wave, it's going to be a leading diagonal. Anyway, it will have also 5 subwaves to the downside, right? So right now we are finishing with the highest probability the first wave. I will tell you why I do believe this first wave is not yet finished, but I will also tell you why with the highest probability this demand zone is going to hold. And after we finish the first wave, we're gonna have a retest of this VPVR, these resistances, and we will basically form the secondary wave, ladies and gentlemen, the secondary wave, all right, at this level at around $120,000, which will be nicely, absolutely perfectly confluencing with the reclaim of that channel, because as I have already told you, we are waiting for a nice reclaim of the channel. That means we need to have this kind of bearish retest, all right? So this secondary wave will be nicely synergizing with the ultra high time frame chart. Together with that, on the high degree chart, there are bullish signs. For example, this one, we are having a bullish divergence, because you can see on the histogram, we are creating a higher low, but on the price action, we are creating a lower low. Together with that, we are also having an attempt of a bullish cross, which would basically confirm this bullish divergence and give it more probability points. Right now, it's vague, it's not confirmed yet strongly, but the important thing is that on the secondary low, the bears are much weaker. Take a look at the momentum we have been doing on this low, and on the second low, it's just much lower, ladies and gentlemen, which suggests that from the daily time frame perspective, we will have a reversal soon, okay? How soon? Let's analyze by taking a look what's going on the 4-hour time frame. 4-hour time frame is not that bullish at the moment, because as you can see on the next higher highs, this was previous high right here, the next higher high, all right, and the higher lows, take a look at the volume, all right? The volume, as we are approaching this resistance level right here, ladies and gentlemen, is basically what is decreasing. This is usually a bearish sign. I've been talking about it yesterday on TradingView, and as you can see, I've been sharing that with you right here. This is not really bullish for a continuation. The probabilities are right now not favoring bulls, right? And take a look what happened afterwards. We have got a big selling volume, ladies and gentlemen, on this price action to the downside, all right? So you can clearly see the bears are strong right here. Together with that, we are having a bearish divergence, already a bearish cross, because we have created a higher high, but the price action created lower high. Take a look at the momentum of the bulls. Very, very small, all right? The bulls are very weak right here, ladies and gentlemen, and that's also what basically gave this candle enough opportunity to be able to be executed by the bears, because if we would not have these bearish signs like the volume and the MACD histogram bearish divergence, the bears wouldn't show up, right? But they did, and look at this. They have been creating loads of damage. If you have been following us in our free Telegram channels, I have told you with the Paradise team how much liquidations we have got. The important thing is that we are right now having the bearish divergence. Let me show you a beautiful picture so you can learn as well. If you are having the price action creating higher high, but an indicator, the momentum oscillator is showing you lower high, this is a decreasement of momentum, ladies and gentlemen, and it's considered bearish, all right? You already know why from the previous videos. In previous videos, I have been going deep in bearish divergences, so definitely watch the previous videos if you want to learn more, or go in our MCP free university. Together with that, you can see that on the RSI indicator, we are having double bearish divergence, ladies and gentlemen. We have got higher high on RSI, lower high on the price action, bearish divergence. Secondary one, lower high on RSI, higher high on price action, double bearish divergence. As you know, I have been waiting yesterday for the bearish cross. We have got it. We have got the bearish cross, ladies and gentlemen. It's a confirmation. A small reclaim retest already happened. This is confirmed basically. So the 4-hour time frame seems to be bearish, all right, and it suggests that we might see low prices. How much lower? Let's analyze. Let's take a look what's going on 1 hour time frame. Here we are creating the secret pattern, ladies and gentlemen, and you already know which one, right? Let's calculate the subwaves of our motive mode wave, which I've been sharing with you after we have completed the 5 moves to the upside. Right here we have started the motive mode wave to the downside. It's an impulse in my opinion, all right? Take a look at this. This was the first wave, secondary wave, third wave, fourth wave, and then extended fifth wave, because the third wave wasn't an extension. So from the guidelines of the Elliott wave theory, the fifth wave needs to be an extension. It doesn't have to be, it doesn't have to be 100% extension, but usually at least one motive mode wave of an impulse always should be an extension. And right now it seems like the fifth wave is an extension and is actually creating a formation of ending diagonal, which is a motive mode wave pattern, and subdivides itself into 5 smaller waves. But here's the trick. All of these subwaves are corrective mode waves, ladies and gentlemen. So let's take a look what happened after the fourth wave. We have created a first wave, corrective mode wave, zigzag, right? Also, one of the guidelines from the Elliott wave perspective is that basically the first wave, the third wave, and the fifth wave needs to be a zigzag. So that gives you more options for clarification if you are calculating the subwaves correctly. By the way, it just came to my mind right now. What you need to understand on the 4-hour time frame is that also we are not seeing any bullish divergences. So when you are analyzing the market properly, you not only need to pay attention to what's obvious in the market on the charts, but also what's missing. And right now what's missing is bullish divergence. As you can see, we are creating higher low so far on the price action and also higher low on the MACD histogram. So no bullish divergence just yet. It's not even visible on RSI. There is no bullish divergence, and the stochastic RSI is not in an oversold area just yet. All right, so let's go back right now to our ending diagonal. Ladies and gentlemen, this was our first wave, secondary wave, third wave, and right now it seems like we have finished the fourth wave that took a formation of a corrective mode wave pattern. And which one? You already know if you have been watching the previous video. Smash the like button, expanded flat, where this is the A wave, B wave, and the motive mode wave C wave seems like already got finished. Let's take a look at this. First wave, secondary wave, third wave, extension, right? Fourth wave, ABC zigzag, beautiful, corrective wave and alternation with the secondary wave, and then final fifth wave to the upside. 1, 2, 3, 4, 5. Ladies and gentlemen, beautifully it stopped exactly below the previous high. It didn't cross above it. It didn't reclaim the channel. So from the ending diagonal perspective, when the fourth wave doesn't go beyond the end of the secondary wave, it's still intact. Right now you can see that we have got rejected perfectly out of it, and it seems like right now we are creating the zigzag. This might be the first wave of an A wave, all right, which is a motive mode wave. So either this is a motive mode wave that will stop lower, probably at around $108,000, and right now we are creating the secondary wave by a contracting triangle. Then we will have the third wave, fourth wave, and fifth wave. Then there will be ABC correction, and then the C wave will take us towards this support zone. All right, so the confirmation is gonna come with how the price action is gonna be developing. Right now what we know from the important levels is that the demand zone will be very strong right here at around $106,000. It's a nice confluence with this descending trend line that I have taken by connecting the first and third wave, and also 1.618 Fibonacci retracement level that I have taken from analyzing this wave right here. And also if I analyze this fourth wave, I will take my Fibonacci retracement tool and I will analyze it like this. You can see it's also confluencing nicely with 1.272 Fibonacci retracement level. All right, so you have a confluence of descending trend line and a Fibonacci sequence levels. So pretty strong level, that $106,000. Is there enough liquidity below us? You can see there is, right? Loads of liquidity right here at $109,000, which should be nicely working for the stop of the A wave, as I have already told you, right? So $109,000. This might be the end of the A wave. Then we will have the B wave, and then the C wave with the highest probability will take us towards $106,000. It will form a beautiful zigzag, which is a must for the fifth wave, right? And after that, basically we'll be taking profits right here. We have already secured our short positions with Paradise Family VIPs with stop loss to break even. And once we get confirmations right here at this level that we are seeing whales and loads of confirmations that big market players are being accumulating right here, we will be positioning ourselves into some strategic long positions. And as you already know, from the 4-hour time frame, we will be targeting the $118,000-$120,000 resistances, right? So let me show you. This is going to be the next upcoming price action with the highest probability. And from the daily time frame perspective, it will be retesting all of these things, the VP, VR, etc. And from the ultra high time frame chart, you have also these confluences of reclaiming the channel. Ladies and gentlemen, so right now, you know what to wait for. Definitely, we are watching how the price action is developing. If we will see that the zigzag is being formed earlier, we will be positioning ourselves into some short position much quicker. But right now, we don't have any confirmations for buying. We are below resistances. Once we get confirmations for buying, probably from this zone right here, we will be definitely looking for some long positions. Right now, however, we are treating the market as a bears. Loads of confluences of being a bear right here on the low time frame chart. We have the resistance, you have the finishment of that expanded flat pattern that I can also share with you right here, flat correction pattern, which you can also find on our website mycryptoparadise.com in our MCP free university. So the expanded flat pattern is like this, A, B, C, where the B can or doesn't need to go beyond the start of the A wave, and the C wave is a big extension, goes beyond the end of the A wave. All right, so you can learn how to trade these pattern on our website, and definitely it seems like this expanded pattern is already finished, which is bearish. All right, so some points to bears definitely, and right now it seems like that with the highest probability we will start going down towards this support, and afterwards we will start picking a steam to the upside after we liquidate all of the over leveraged long positions, as I have shared with you the liquidity heat map, and we will start pumping to the upside, and that will be basically very nicely working with the secondary wave from the ultra and high degree perspective. Ladies and gentlemen, smash the like button if you have completely haven't hated this video. As you know, I'm recording for you every Tuesday, Thursday and Saturday, so I will see you again on Tuesday. Right now, watch out for this contracting triangle, which basically having these contracting lines, and you can see we are creating after the first wave right here an A, B, C, D, and right now it seems like we are finishing an E wave. So also there can be some nice scalp trade or day trade coming, right? Day trade coming once you get a confirmations of a breakout below this ascending trend line of that triangle, and also you are waiting for the reclaim, right? A beautiful risk to reward opportunity for a trade position. Ladies and gentlemen, play with strategy, play with great tactics, make sure that you are working on your long-term profitability. Don't try to get rich quick, all right, because that's a great fast path to a long-term failure. Watch out for scammers on Twitter. Right now they are increasing. Don't trust these meme coins, all right, and these kind of get rich quick schemes. And I will see you again safely on Tuesday. Take it easy and smooth. Cheers.